How do you view kind of when we start looking at tariffs and also the impact that has on not only revenue numbers for companies, sales numbers? Does that begin to mask or distort data from an actual unit volume perspective? And are we really almost falsely inflating numbers and sales just because of a tariff? Or how are we navigating kind of that information?
I think that's a really good question. The first thing I want to hit on is I think the markets, and I'm using that as a broad term, have gotten numb to the headline news of tariffs.
It's probably a very good point.
And so when it was first introduced, called in the first quarter, we had big market pullbacks, but it was a V. It went straight down and came straight back. During that time frame, following probably 90 days, headline news on tariffs impacted the markets a lot. There's a lot of volatility. And since then, I think we've come to realize that as far as the markets are concerned and individual businesses, they're kind of figuring it out. But you bring up a really good question, which is the second part of what we want to talk about today, is what is the output and what does it look like? And are we artificially thinking things are better than they are? Very recent study that was done that basically is saying retail sales are up about 8% year to date. The real issue is when you take that on an inflation adjusted standpoint, retail sales are only up about 2%.
Yeah.
So what does that mean to the consumer, or what does that mean to people? You hit on something called unit sales, right? So when we talk about growth, we're talking top line revenue.
That's right.
Is retail
focus
up,
on.
right?
Yep.
Well, you can have artificial growth because of the inflation and maybe think things are good, but in actuality, you're selling less products. So in essence, you're not doing better.
Right.
And
the
so
consumer's not buying more
as many products. They're just paying more for the products that they're buying. And in essence, they might be buying less, but the top line number of the sales number might be equal to or higher because of the inflationary data. Now, part number 3, what does that mean? I do think inflation is easing. While it has been sticky, it's come back down, right? It was a big hit for a period of time. It's never realized the way the prognosticators kind of all said it was going to be. What does that mean looking forward to the Christmas season?
Yeah.
And what we are starting to maybe see is you've got a lot of employers that are not gearing up for a Christmas season like they have in the past.
Yeah.
You've got some of the major shippers. You've got Amazon.
Flat in hiring.
Amazon flat in hiring. And so I think that we're all kind of masked by the fact that it maybe feels like things are up from an inflationary standpoint, but again, people aren't hiring the way that they traditionally would for the Christmas season. Now, that doesn't mean it's going to be a terrible season.
Right.
And by the way, they could be wrong, right? Trying to predict these things is really challenging. And the consumer this year has been really challenging.
Yeah.
The whole part of what I think is important is as we think about what we're investing in, as we look at it from an investment advisory committee, as we take our forward forecasts on where we think things are going, I'd say we're cautious. Yeah. I think we're cautious in the things that we're investing in. I think that we're very cautious about the consumer right now. We do have a kind of two-tiered society. The upper income people still are doing really well. Middle to low income, they're hurting, right? And they've been impacted greatly. And so when we make decisions on what we're going to invest, we take all of that into consideration.
That's right. Not just the revenues, what's the unit, really looking at the data.
That's exactly right. And I do think that there's more noise than bite in tariffs. And what we have found is, and we've mentioned this in previous times you and I've talked, it's a negotiation tactic for this current administration.
Certainly appears that way.
And what actually is realized is very different. Now, final topic before we land the plane on this. The tariff income or the tariff revenue that is coming into the United States is impactful.
Significant.
It is impactful. And it does have the ability, don't know how long they'll sustain this, can't tell you what it means, over the next 5 to 10 years, but it is impacting both national debt, how much we're borrowing. It is a revenue source for the United States we haven't had before. And so I do think there's a lot of good, but I think it's caused a lot of confusion. And what I would say as a committee is we're constantly monitoring.
Always got to monitor. If you'd like to learn more, check us out on PrevailIWS.com or call one of our advisors.